Okay, welcome to the Aramir Roundtable. Today is the 2nd of March, 2020. And we have a special guest from Ukraine, the Quantower team. They're going to show us their trading platform with an orientation towards options trading. So welcome, gentlemen.
Hello, everyone. Thank you, Tom, for the invitation. I'm very happy to be here. And let's start. Our today's topic is Quantower and option trading in our application. So let's go ahead. First of all, let me briefly introduce myself and introduce our company. My name is Artem. I am the lead of Quantower analyst team. And I would like to add a few words about my background. So I'm a professional quantitative analyst with more than 8 years of industry experience and trading experience. And my responsibilities mostly are building of probability models for option pricing, not only for option pricing, also for all derivative markets, but today's topic is related with options. So also building the HFT models and strategies and building the structured products and portfolios. So let me introduce our company. Our company is Quantower, and we are a software development company, and our main product is the professional desktop trading application. So the main idea of our product is that we are going to be broker independent. So we are not fully related with any broker or exchange. We are not focused on any broker. So all our brokers, all our connections and exchanges have the same conditions, and we not prefer to use some broker and not suggest our customers to select some broker. One of our benefits is that we allow to have a multi-connect. So if user, for example, have different accounts or different connections to the data vendors, it can be combined together into the one interface. And we allow, for example, to get market data from one data provider and make trades on another data provider. It's very useful, especially in case of options, not only in case of options, but in general, because it allows users to build models like arbitrage trading in case of cryptocurrency exchanges. Or, for example, maybe if you have some accounts and different brokers, also to manage your accounts and to make trading directly through the one platform and through the one interface. So our main idea also is to cover all main asset classes. So we fully cover stocks markets, we fully cover options, futures, ETFs, FX trading, and crypto. For us, it doesn't matter totally to work, so it's not a problem to work with any other asset classes. And if we receive requests from our, for example, institutional partner or customer to add the coverage of some maybe certain asset, it's not a problem. So we can also work with bonds if it needed, or it doesn't matter fully. So the idea and one of our benefits is that we are highly related with our traders' community demands. That means that we are trying to listen, and we are listening our customers, because we would like to be a modern and famous trading application and to cover all famous and modern trading methodologies and techniques. So for now, we cover fully the volume analysis technique. We cover TPO charts, DOM surface, but for now, it's not the topic of our today's webinar. That is why I just briefly and quickly go through the features that we have. And after that, we can discuss in the question, maybe via the question, all these panels, if it will be interesting for the customers and for the participants of this webinar. So here, first of all, so we cover all advanced chart types. And as far as I know, we cover all existing chart types that you can find in the trading community. So we perfectly well work with the Renko, with Kagi, cluster charts, point and figures, doesn't matter. So if it needed for user to build something like the certain conditions of, let's say, Renko, it's possible to do via our application. We do it because we process all historical data, we process tick data, and we allow users to build any combination of conditions, input parameters of some time chart aggregation, time aggregation, doesn't matter fully. So, but it's not the main benefit, it's just something like the feature that is good to have. So, and it's useful because we have a lot of different traders, and different traders prefer different techniques and different chart typing. So we just provide it because it's because it's useful. Our traders like this. Volume analysis, we have great coverage of volume analysis. It's very interesting technique. So we have cluster chart, we have the profiling, we have the TPO, we have any volume related data. So we have about 20 different data types related, somehow related with the volumes. It's very useful, and in details, maybe I will tell you in some of other webinars about this. For now, just brief information. And DOM surface. DOM surface, it's very, and in my opinion, that is the most modern trading technique for now, because it's allowed to look inside the structure of level 2 and understand how the structure behaves through the time. So it's great, and it's very useful to use this trading technique in combination with volume analysis technique. Why? First of all, because volume analysis technique allows you to find and to get some important price levels. Yes, these price levels can be useful in case of support resistance, for example. And this trading methodology, DOM surface, we call it DOM surface. It's just our preferable name, that doesn't matter. So, but this technique allows you to understand how the price approaches to this level. So you, for example, selected some level, yes, and you think that this level is support or resistance level. Yes, but you need to understand, will the price interact with this level or no? So to do it, it's very useful and very helpful, because you can look inside the current market structure. You can analyze the demand and supply, and you understand how the price reacts on this certain price level. So in combination of volume analysis, these two methodologies allow you to follow the market. So you find that support resistance, you check, do we have, for example, the huge demand for now? Yes, will we break this level, or we will use this as a support or resistance? So, and today our topic is options. And first of all, I will give a brief information about options and introductory information. And after that, in the end of our today's webinar, I will explain, and we will discuss with you some more professional approaches, how to use this asset class option in a professional way. So how to get the profit, and how the common retail customer can maybe improve his practice, and how to practically work with options. But first of all, let's consider and let's understand what the option is. So option it's a derivative contract which gives an investor the right but not the obligation. And here it's the most important part. Yes, that this is the right. This is not an obligation to buy or to sell the underlying asset at an agreed upon the price and date. The main idea of option is the insurance. Because investor, if in case of using option, investor can protect himself against the risk in a variety of different scenarios of price movement. So that is why, because of this flexibility of options are widely used in portfolios and structured products. So because of these special conditions, all these conditions we will discuss today, and I will give you an example. I will show you on the practice. I will show our application, and we discuss with you what we can do with options. But for now, let's just understand the physical meaning of option. So just look at the image. This image has two separate, let's call scenarios. Yes, the one scenario is related with, just a second. One scenario is related with the put strike option, and another one is related with the call strike option. So let's discuss this separately. And first of all, let's discuss the case of put option. So imagine the situation that we are a company and our main business is to grow the wheat. So we grow the wheat, harvest it, and after that we sell it. So what is our interest? Yes, well, our interest, first of all, is to sell the wheat. And that's all. So it's our business. We need to grain it and sell. So, but it's very important. We have some price level. It's like the break-even value for us, where we have the profit. So if the price is above this put strike, yeah, this level of price, we have a profit. It's okay for us because we can sell, we can receive some profit, and we can continue our business. Yeah, but if the price go below this price level, we will receive the loss. So what we can do, how we can use this? First of all, what we need to do in this case, we just need to buy the put strike. So imagine that the price of wheat is now 90. It's just random numbers, not related with really real prices of wheat or any other asset classes. So just for educational purposes, it's imaginable situation, not more. So and we are here in the time. Yeah, the option contract has an expiration period, expiration date. So it's the moment and the time when this contract will expire. And what we can do, yes, we know that our break-even level is 80. So, and we are, as the businessmen, yes, we would like to sell our contract at the most expensive price. We would like to sell our wheat, our spot. It can be on the spot market, it can be via the future market, doesn't matter for us. We just would like to sell our wheat. And we would like to do it with the most expensive price for us. So what we can do, we purchase the put strike and wait for the expiration. We have a few scenarios. If the price is above the strike price level, for example, it's near the 90, for us it's not needed to execute our option. Why? Because first of all, option is not an obligation. It's just the right. It means that I can do it, I can execute it, or I can not execute it if it's not needed for me for now. So, and I am, as the CEO or as a businessman or as a part of some company, decision maker, yeah? In this case, if the price is 90, it's not needed for me to execute option. Yes, I just sell my wheat via the futures or via the spot. So I go to the spot market and sell out my wheat, yes, with the price of 90. So it's out of the money case of options. Yes, and the opposite case, it's fully similar, but it's opposite for call option is that, for example, we are a company, we are a bakery, yes, and we purchase the wheat to provide the bread on the market. In this case, our interest is to get the wheat in the most cheapest price. So if I purchase wheat on the 90, and I use this, I provide the bread, and after that I can sell my bread with some price. So for me it's important because so I have the price level here. It's a break-even level for me. So if the price is above this level, I receive a loss. So my business process will provide me with some loss. So for this case, I can purchase the call option strike. And if the price on the expiry date is above the strike price level, what I can do? I can execute my right and receive the price of 100. So I can purchase the wheat with the price of 100. It doesn't matter that, for example, current price is 150, for example. So this is the main idea of option. And the main idea is that we can insure ourselves against the price movement. And it allows us to build very interesting strategies on the practice. And yes, benefit of options, before we go to the practical cases, and I will show you our trading platform, some benefits and risk related with options. So as a benefit, I can tell that it's extremely flexible tool. Yeah, because of different combination of conditions of option. Yes, if I can combine option with some underlying assets, so for example, I have the portfolio of stocks or I have the portfolio of futures, I can do a lot of interesting things. For example, I can protect myself against price movement. I can protect myself against the time decay. I can protect myself against the volatility or something like this. So it's very interesting tool. Hedging opportunities, it's another benefit. Hedging opportunities I just described you on the previous slide. So, but option also has a lot of risk-related conditions. So, first of all, it's complexity. Option is quite complex tool because the pricing of option depends on a lot of inputs. And for pricing of option, we need to use some special models like Black-Scholes model, like maybe binominal or trinominal models. It's quite complex, and it's complex for newbies to understand how the options works at all. So, and it's complex tool. But when you are familiar with, when you become familiar with options, you understand the power of this asset class. Yes, another risk related factor, it's a multifactoring of pricing. What does it mean? For example, in case of stocks, so the price totally depends on the company's results. Yes. So, and that's all. Company's result. Yes, I understand that this is quite complex, and we need to process a lot of some reports to understand how the company feels, how the company reacts on some market events. But it's more easy because, for example, on the future markets, we have two dependencies. First is the price. The second is time, because future market also related with the time. Yes. Option market related with the price, with the time, and also with the volatility. And the volatility is the most influenced factor. It's most difficult to not to measure, difficult to predict. So to predict the volatility of options, we need to process a lot of data, and we need to build quite complex models to do it. So we will briefly discuss this also today, but it's a complex thing. And in some of cases, there is an additional risk related with options. Yes, I will discuss it and explain it further. But in case of, for example, naked options, it's extremely risky. Risky because you can receive, you can just destroy your account in case of something goes wrong. Yes, and also options, it's necessary to manage the portfolio, because in case of options, we need to also think about the margin. And margin related with option is mostly span margin. Span margin calculation system is quite complex also to understand how, and because we need to work with the spreads, we need to understand how different assets work together. And all of this we need to take in our mind and think about this. But it's not so complex also. Yes, maybe it's, I tell a lot of information, and don't worry about this. We will go together with all of these points, yes, and I will explain you how to use options safely and how to use it really with the profit. Okay, let's go to the practical part, I think, and I will show you what we have in case of options.
And just so you know, most of the people in our community are doing fairly complex option spreads already. Like butterflies, you know, things like that.
No, if so, it's okay. So if our community perfectly well understand the risks related with options, it's great. So, and the last part of our today's webinar will be very interesting, I think, for these participants, because I will try to explain you how to use and how to find the profit and make the consecutive profits.
Great.
Okay. Let's go to the practical part, and I will show you our trading application. So to open the option analytics panel, what you need to do, you just need to go to our main toolbar and click on this icon. And this panel meets us with the option desk or option chain. First of all, what you need to do, you need to specify the underlying asset. For our case, I just selected the S&P 500 futures from the RITMIC. So here you can see the related information with underlying. So here it's price, it's last time, spread, change, open, high, low, and some volume related information. From time to time, we also can receive the open interest, but not all providers provide this information. And maybe in case of CQG, if you work with CQG, we can also show the open interest information here. Okay, so this is table. It's quite common view. Here you can manage the visibility of columns. You can specify whatever you want to see. Here you can add the Greeks. You can maybe add monetary value. Doesn't matter. It's quite easy for you. By clicking on this button, you can select the visibility of the option series, and in brackets there is this number means the number of days until the expiration. And here you can select how many strikes would you like to see. So by clicking, I just change the desk, and I can work for now with 32 strikes and one series.
Before
Okay.
you leave the screen, did you have the ability to put the mid price?
You mean the middle price between ask and bid, or what?
Yes. Yes.
Yes, we can do it, and we can also make a dependency of what price to use in calculation of Greeks and in calculation of volatility. You can control this here in the option in the settings. Maybe we do not have right now the column that represent information about the mid price, or middle price of the bid and ask, but it's not a problem. So if you someone requests us to add this information to our panel, not a problem for us. But we can work with a mid price here. You can specify what price you would like to use for implied volatility calculation, and here it's a middle price also.
Yeah.
Okay, so what you can do here. First of all, the first what you need to do is to add some paper positions. So it's quite common case. Yes, let's do it. So I have added the paper position here. And on this bottom part, I can see the related information with this position. So I can see the implied volatility, I can see creeps. And also I can, by specifying these controls, I can include or exclude this certain position from the analysis. I will show you. So by clicking on this Add Strategy button, you can select one of existing trading strategies related to these options. So, for example, we have about 40, maybe more, already predefined strategies. For example, you can find the condor or some butterfly, doesn't matter. Yeah. So, for example, in case of condor, here you can see the structure. It's an image. It's not a real chart. I will show you our real chart. Let's say in image. You can here specify the strategy name. No, it's short condor, yes, the formula that is used, and some definition, some description about the strategy. So by clicking on the Add Strategy, system automatically will add the strategy to our existing portfolio. Yes, and this is the grouped, special grouped row that allow you to work with the all strategy to the whole of strategy. So you can, for example, add another strategy or exclude some certain strike from the strategy or ungroup the strategy. So a lot of different things, but it's just for to make it more convenient to work with the platform. So the main idea here is that you can control your strategy. So, for example, for now we just added the short condor. Here I can see the whole Greeks for this condor. Yes, I see the volatilities for every leg of this condor. I see the pricing, and by the way, by specifying the values here, yeah, I can send all the strategy to the liquidity provider by one click. So I just click on the place paper, and system automatically will send all our strategy to the liquidity provider, to the Rhythmic. Or I can do it one by one by clicking on this place button separately. Okay, but let's go ahead and I will show you what we have from analytical point of view.
And there's a quick question about the data feed. Are you getting your data from CQG or someplace else?
Yes, as I already told, we work with different data providers, and for now I'm connected to the Rhythmic. But yes, we work with CQG. Its integration is fully finished, but we need to finish and finalize some documentary process, let's call it. So, because it's CQG, it's quite bureaucratic process. Yet we need to fill a lot of information. We need to fill a lot of forms to receive some licensing from the CME and from other exchanges. So, from technical perspective, it is fully finished. Yes, and the benefit of using Rhythmic and CQG in this case is that we, by one integration, we can cover all existing brokers or FCMs. And you can do it simultaneously. So if it needed, you can simultaneously be connected to few brokers.
Do you support Thinkorswim or Interactive Brokers or both?
Yes, we support interactive brokers. In case of Thinkorswim, For now, no, but maybe we will add. I don't know about do they have the public API?
They have an API. I'm not sure how good the documentation is, but I know they do have one.
No, for us, it's to add the sink or swim. It's not a problem. Also, from technical perspective, we can be connected to any third party who has an API, and for us, it also doesn't matter what the type of API it is. So it can be fixed. It can be some native C# or WebSocket, for example. So it's not a problem for us. That's totally. And yes, interactive brokers. Yes, it's already covered. We work with interactive brokers, but truly saying, I can tell that the quality of API of interactive brokers is quite bad. And interactive brokers is great broker, truly saying, one of the best brokers. But API quality of API, it's cannot be. I cannot compare this, for example, to the Rhythmic API or to the CQG API, because for CQG, it's totally the best API that I have ever seen. Yeah, Rhythmic is quite good. No,
and then Marcus also asked, can we plug in historical data from local source?
No, about the historical data, it's quite important question. Yes, we can, and from technical perspective, from technical point of view, it's not a problem for us to import. No problem with this. We can do it from the Quantower, we can do it from the IQFeed or any other third-party data provider. But in case of receiving historical data directly from the CME, for example, the trader must have the license to receive this market data. And yes, we follow these rules. So if I'm a trader, if I have the funded account, let's say with the sum of CQG's broker, no problem. I pay some $7 as far as I remember, yes, and I can receive market data and historical data because I have a license. But if I do not have a license, I need to pay $90 or I don't remember exactly correct prices for now, but around $90 to receive the market data and historical data. And yes, we, in the case of CQG and Rhythmic and any other DMA connections, we do not use our server. So it's direct connection. We do not store any historical data on our servers because it's restricted according to the rule of exchanges. So we can do it, for example, in case of cryptocurrency exchanges, no problem with this. In case of CQG and Rhythmic, we just can use their public API. If they publicly allow us to request historical data, no problem, we can do it. And we do it, yes, because CQG and Rhythmic allows to do it.
Yeah, Marcus says he has data on his local disk. Can he use it with your software?
I understood your question. Yes, we can import historical data directly to our application from the interface.
Perfect.
Okay, I think we can continue, yes?
Yep.
Yes, let's look at the analyzer. So it's analyzer. By clicking on these checkboxes, I can include or exclude some certain strikes to my to the chart and to my portfolio. Let's call it portfolio. It's very convenient because I can zoom in or zoom out just by mouse wheeling. I can do it manually by panning the scale, panning the axis. Yes. What you can do here? It's quite common. It's not very interesting, but what we can hear, what we have here. So this red line is the inner value of option. Yeah, this blue line is the time value of option, and yes, you can play around with the chart, whatever you want. No problem with this. Here, by clicking on this combo box, you can specify what information would you like to see. For now, it's a PNL. Yes, but if it needed for you, you can, for example, select the delta and you will see the delta and how delta will change if the market price will go, market price of underlier will go up or down, and gamma, any Greek here. As you can see, every Greek has some specified color. It's very convenient because it's something like the linking. So it's just UX case. It's very convenient because we allow to build the combination. We call it overlays. I will go and I will show you what does it mean. But this relationship in color allow you to understand that this value in info window is delta. This is the gamma and just UX case. So And what you can do here? Yes, you can specify what information you want to see. So, and also you can add the overlay. So what does it mean? I specified the main data of my chart. So main data type is PNL chart, yes. And also I would like to add, for example, data, yes, to know. So it's very convenient for me because for now, if, for example, my strategy is somehow related with delta hedging, it's important for me to understand how the delta will change if the market price of underlier will go up or go down. Yes, and for me, it's very easy to do because I know that this is the last price of underlying. If the price go up, I will receive some amount of money because my option is become in the money. Yes, and my delta changes this way. Yes, and I can do the same with any other or with the Greeks, as you can see now. So it's very flexible and you can do whatever you want. Yes, and also we support the what-if scenarios. So if it needed, this is very important, to simulate what will be with my portfolio in case of, for example, 10 days left, yeah, or volatility changes on 5% or 10%. So I can do it and I just specify and I see how my portfolio will change, what will be the value of my option portfolio if the volatility, for our example, volatility time decay is 0, so no time decay, so we are talking about today, yes, and the volatility shift is 10%, 20%, and 30%, so my price will change like this. It's quite useful, and it's most of maybe, yes, I think it's a main part of any analytical approach to options, yes, because I need to understand how my portfolio will behave to the market. Also, we will go and we will, in the future, we will add a lot of additional information here, and one of them will be the opportunity to calculate the margin. It's quite complex to do, but it's important, my point of view. So we will allow users to understand what will be with my portfolio and what will be with my margin if I add or remove some position or paper or order to my portfolio or from my portfolio. So because I can predict margin, yes, and it's very convenient because from time to time, especially in case of when I use margin, when I use a lot of my margin from my account, so it's very important to control this, especially if I have a naked options, because naked options is quite dangerous strategies. Okay, let's go ahead. So here you can play around and see what we have. It's quite convenient. And the last it's not a feature, it's part of our application, is the volatility skew. This volatility skew allows you to see how the volatility changes right now. For now, we just represent information. Yeah, here you can select different series. You can select how many strikes you want to see. You can select the type of the option, so it can be call, it can be put, it can be both of them. It's not fully finished for now, and it's this part of our application is in development, and in the further releases, in our further releases, we will add the opportunity to make a simulation of the volatility. What does it mean? It means, for example, that I can, for example, by using my personal models to calculate the volatility, it allowed me to build this model here. What does it mean? So I can, for example, specify some amount of points and changes these values, changes the value. So it's current market values for now. Yes, but for example, I think that the market price of option is incorrect. It's unfair. Yes, or market is inefficient right now. Yes, and my model shows me that for now it's good to use other volatility. Yes, and here I can select some certain strikes or all strikes or some group of strikes and specify another volatility. And automatically, when I do it, the system will build the table on the below part of the chart. And this table will contain information about the theoretical price of options and all theoretical Greeks. This will allow us to understand the arbitrage opportunities, volatility arbitrage opportunities. Or user, for example, can find and understand the incorrect, no, it's not incorrect, inefficiency of the market or unfair price. It's pretty useful in case of market making on options, or if I use strategies that use the incorrect of how to say it correctly. So if my model finds the moments where the price is inefficient and I need to find some way how to use this. So, and the volatility is the most important part of options, yes? And understanding this will allow us to execute this inefficiency. And yes, also here we will add the opportunity, the possibility to build the 3D surface. So it will be the 3D model of a comprehensive model that will represent information about the whole market of options. So all series will be included, all strikes from all series, and the user will see the comprehensive view of all volatilities related with this certain underlying contract or stock. Okay. Maybe you have some questions related with the...
Oh, Marcus asked, can he have a Greek graph and a subgraph? And I asked him, does he mean like overlay the Greeks on a chart on top of the main chart? I'm not sure exactly what a subgraph.
I just already shown this.
Okay.
Yes, yes, yes. We have this, and you can do it, and you can enable this by specifying the main data type. So main type of data, and for now it's the PNL. And you can add, for example, some overlay to your chart and see. And see the, to zoom it correctly. Yeah, and see how your Greeks, the Greeks of your portfolio will change as if the market price of underlying will go up or go down. Yes, from technical point of view, it's possible, and you can add overlays. We restrict to add few overlays simultaneously because we did a lot of UX tests, and it's not convenient if you add few Greeks simultaneously to the price chart of options. That's why we selected to prefer to use just one, to add just one overlay to main chart.
And is it possible to send this trade, say, to your broker?
Yes, it's possible, and this is for so the main idea of panel is to send these paper positions to the broker. Yes, you just specify paper positions, whatever you want, and yes, also it's not the paper positions. Here you can see the working orders. It's for now it's a demo account, yes, and there is no possibilities from technical point of view to send orders to the Rhythmic because of this such kind of account, yes. But
right.
Yes, it's possible. Here, as you can see, test and real positions. So if you have a real positions, yes, you will see all the real positions combined here. And you can, by clicking on these checkboxes, you can include or exclude some of real positions and paper positions from the analysis. And yes, all your paper positions, if it needed, and if you want to execute these paper positions, yes, you can do it by clicking on this place paper button or by clicking on every particular button for every particular strike. So yes, it's possible.
And then if you have an open position, say your long call, and you wanted to adjust it, maybe roll it up or down or do something different, can you overlay the current position with the proposed position?
Yes, also it's possible by all, we have the same interface. This table contains paper positions and real positions, and by clicking on these checkboxes, you allow system to include or exclude real position or some paper position from the analysis. So yes, sure, this chart will be built with the relationship. So it will use the real positions, and it will use also the paper positions, and you can manage this by clicking on this analyze checkboxes.
Can it show both at the same time, say your existing position and your proposed position on top of each other?
For now, system automatically, you mean, for example, from technical point of view, for now I cannot do it because Rhythmic restrict us to send orders for options because it's a demo account in Rhythmic, so it's a restriction on the Rhythmic. But technically, it will be just the separate row here, and this row will represent information about real position. And system, if for example I would like to add the same strike, so I would like to add another paper position with the same strike, system understands that this is the same strike and will net the exposure of your position. Maybe I'm not understood what you mean. So is it an answer on your question or no?
Well, just to display the original, the current position, and then if you're proposing adding or changing it, what the new position would look like overlaid on top of the existing one.
You mean understood. You mean something like two steps. So for now we have portfolio that includes this, and this. And if I do this, the portfolio will be like this, something like this, you mean, yeah?
Right.
For now, we cannot do it. But from technical point of view, it's easy to do. So what you can do, for example, if, let's say we have something like this. So it's a spread, yeah. And what I can do, for example, I can simulate this scenario if what will be with my portfolio if I close, let's imagine that this is the real position, yeah? And this is the paper that I would like to add. So if I add this paper position, I will receive this spread. Yes, and by clicking on these checkboxes, I just can show what will be with my portfolio if I close or add some position to my portfolio. But simultaneously to see the difference as an overlay, for now we cannot do it.
Okay. And Bill said the key question is why would you use that instead of Thinkorswim? So Thinkorswim is probably designed for option traders primarily, and they do this kind of overlay stuff and some other things. But what kind of benefits would you say there are to using your software? I know obviously if you're not using Thinkorswim, that's yeah.
Yes, I understood this question. So we would like to add here. For now, it's very similar to Thinkorswim. There is no some special benefit. So, but we will add the opportunity to calculate the probabilities. It's very important. So I explain you what I mean. For example, you have your strategy. Let's say that you are a sell-side trader, yes, and you have a condor, yeah, and you would like to receive the premium of this condor, yeah, as your profit. Yeah, and for you, it's very important. This question is fully related with our next part of webinar, but okay. So system will allow you to understand the probability of reaching the target. I know that Thinkorswim has similar feature. Thinkorswim also has a possibility to build probabilities. And also Thinkorswim has something like the probability cone. But Thinkorswim uses the normal distribution model there. Normal distribution model does not cover real market behavior. Yeah, it's very similar from time to time, it's okay, but in a common practice, it's not covered fully. So we are going to add here our personal model that will calculate probabilities more accurate. So, and I explain you how it will work. But it will be one of the main benefits from our point of view. So it will allow user to understand correctly what is the probability to reach the profit or to receive the loss. Yes, and you can build, you will be able to build the model. So if you're familiar with how sink or swim and Monte Carlo simulation, you will find that it's okay in general, yes, but it's not okay in, so to accurately calculate the probabilities and to accurately calculate the, we call it the mathematical expectation of your position, or it's one of the statistical factor. So it's very important to include the stages of market. For example, what I mean that if we use, so for example, S&P 500 now is in flat, just a match. Yes, it's a common stage, it's a normal stage, and yes, we can use for these purposes, we can use the normal distribution model because it will be quite accurate. But if you, for example, find that the current volatility of S&P 500 is not normal, for example, it's extremely high or it's extremely low, yes, what we need to do to calculate accurately the probability? We need to make the process something like the, we call it the clustering. So to accurately calculate the probability, I need to get from the history moments with the same conditions. For example, if we use to measure the volatility of S&P 500, let's say we use, historical volatility in this case. We can use some other a lot of variety of models how to measure the historical volatility, yes. But to simplify, let's just imagine, we just use ATR, yeah. So the difference between high and low, very simple, simplified example, yeah. And let's say that the ATR is imaginable situation 20. Yeah. If we measure, if we understand that this is a common normal state of market, it's okay. So, and to accurately calculate the probability, we need to get from the history the points with the same conditions where the ATR have the same value. So it's because it means that we have the same state of market. So for example, maybe it's not clear what I mean. I mean that to accurately compare different historical periods, we need to be sure that these different historical periods have the same or similar conditions. It calls it clustering. So we cannot compare, for example, 2008 with some other year because it's a different nature. So to do it accurately, we need to compare 2008 with the same or similar historical data with the similar conditions of volatility. And we would like to build a model that will cover this.
Marcus asks that it's an impressive interface. Can he ask what you use to get the results? Is it something like Dash or a more dedicated client?
Just a second. Yeah, I see. Impressive GUI. Can I ask what do you use to get this result? Oh, we have a perfect design team, to the same. Yes, and also we are trying to do the UX testing. So we do a lot of few prototypes, let's call, yeah, few prototypes, and after that we make a testing on our customers, and the customers give us the feedback that this is convenient, this is not convenient, this is useful, this is not useful, and after that we process all these results and make a decision how to represent information the most convenient way, the most efficient way.
I know one of the benefits would be the big array of tools that you have available, like the TPO profile, the order flow surface, volume analysis, all that kind of stuff. That's not really, from what I've seen, very robust in Thinkorswim or even existent.
Yes, it's because we would like to cover and we would like to work with all modern techniques. Because as I said in the beginning of our webinar, we are listening our customers. We are listening our customers and we are listening their feedback. If a community love some technique, why we do not to add this? We must add this because the people like it. People like it. It's useful for now. So, and yes, we add this, and we would like to be the best platform. We would like to provide the best solution, and in different. Not how to say it correctly, to cover all asset classes, to work with a lot of brokers, to work with exchanges, for example, cryptocurrency exchanges, so it can be DMA connection, but it's quite complex in case of DMA connection, yes. So we would like to not just to be a business, we would like to be the product for traders, because it's something that can really help users to reach their targets, to just to work with financial markets is quite complex thing, yes. And if we provide something that is flexible, that is useful, that is interesting, it's good. Yeah, because everybody, I think, know the interactive brokers application, native application. It's very difficult to work with this application. So I love interactive brokers, truly saying, as a broker, but I do not like their software because it's very complex to work with, and the API especially.
Well, great. Well, I think we've answered all the questions. So, do you have anything else before we wrap it up?
Yes. Yeah. Let's go ahead a little. Yes, I just would like to have some suggestion and to add some suggestion to everybody who would like to work with options. So it's something like a tips, yes. And first of all, it's very simple thing, just avoid naked shorts. But I think, guys, you're very familiar with options and you perfectly well understand how it works. So just avoid the naked shorts, because naked shorts just can simply destroy your account, and you can just not lose all money that you have on your account. You can receive a negative balance of your account. So it's very easy. If you sell-side strategy, yes, if you prefer sell-side strategies, use condors and vertical spreads. It's protect you against the volatility and protect you against time decay in some, no, not fully, but it can be used. Yeah, be aware about the portfolio's margin and control it, because in case of options, it's very important, especially if you have a naked options. Maybe not all, but some parts if you're... So I think you know that span margin is the system that calculates the margin for options.
Yeah, it's risk-based margin. Yep.
Yes, it's risk-based, and behind mathematical background of span margin is 16 scenarios of risk. I know because I know how it works. So it's 16 scenarios of risks, and the span margin system automatically select the worst. So the most risk scenario from 16 scenarios. So 16 scenarios, how it means? It means that the price go up with the one standard deviation. Yeah, volatility go down with one standard deviation. It's one scenario. The next scenario, yes, price go up to 2 standard deviations. Probably volatility also go up to standard deviation, and 16 scenarios. After that, system will calculate different spreads, cross-exchange spread, inter-commodity spreads, and all of this process, and get you one number. This is your margin. But the problem is that it calculates on the end of day. So it cannot be calculated real time. I think from technical perspective it's possible, but exchange provide brokers with the special span file. And this span file have all these conditions, and you can calculate margin once a day or 2 times a day. So, but the problem here is that the price can move dramatically just right now. And if you have the short naked position on option, you can receive extremely huge margin very quickly. And you will not understand why, because system will process margin and give you and tell you, broker tell you, guys, you have extreme margin for just right now. So cover this margin or you are destroyed.
Yeah, our community uses mostly defined risk trades, so spreads, verticals, butterflies, condors, things like that.
Yes, it's great because spreads it's protected from the volatility impact.
Yeah.
It's in case of, for example, condor. Yes, price cannot move up and down simultaneously. Yeah.
And you won't have any margin surprises. Yep.
I have margin surprises in my practice, so that is why I very strongly suggest you guys, if you trade short options, be aware and be careful with the margin. It's very important. Yes, and a few things about the strategies and try to build a strategies that is related with the marketing efficiency. What does it mean? What I mean here, I mean that marketing efficiency. So in the normal state of market is efficient. It means that the probability to have a profit and the probability to have a loss is 50 to 50. So you cannot receive consecutive profits if you will behave this way. So you need to find moments of the time when you have a benefit under the market. To do it, you need to find the mispriced option. How to do it? Most of them is because of the model that is used behind the options. So model is related with normal distribution or log normal distribution. I'm talking about the Black-Scholes model. So, but it's not fully cover all cases. So, for example, what I mean, if you have at the money, let's consider at the money strikes. Yeah, at the money strikes have a probability delta. Yeah, delta represents the probability to be in the money. Yes, 50 to 50. It's okay. Normal distribution is fully the same with the real market distribution. Yeah, real market distribution changes every time by every tick. Yes, but in case of short or in case of deep out of the money options, and if you build a strategy, let's say vertical spread or condor or any butterfly or any other such type of spreads, or far from the at the money levels, the probability and delta of these strikes can be not full-time efficient, cannot be efficient full-time. So from time to time it's inefficient, and you need to get these moments, because these moments, if you get this, these moments provide you with the possibility of volatility arbitrage. So you can use this differently. You can, for example, use the market making strategies and you just price in your levels in the book, yes, and send that the correct volatility is this value, yes, and you place in around this value. Yes, so you just sell, and after that you put opposite order and buy back. Yes, or for example, you just can short some vertical spread, sell vertical spread, and hold this until expiration, because you know that your calculation is more accurate than the calculation of Black-Scholes model in this moment of time.
Well, great. Well, I've got to run to another meeting. So, anything else? Last things before we call it a day?
From my side, it's all. Thank you for your time.
Okay.
Yeah.
Well, thank you so much for showing us your platform. I know it's free to download. The option stuff is extra, but go to the Quantower and
No,
check it out.
we can provide demos, and we can provide some amount of licenses for the participants of this webinar who is interested in our software. No problem with this. You can just text us, and we will provide you with licensing.
Yeah, just send me a message on Skype of how to do that, and I'll post it in the recording, and then we can get some of our community members using it and giving you some feedback.
Mm-hmm. Okay, thank you, Tom, for your time. Thank you, guys, everybody who joined to this webinar. I'm very pleased.
Thank you very much.
Thank you, too.
All right. Bye-bye.
Bye.